Hi everyone, today let's talk about Tesla earnings. Then we'll get into all the usual metrics and charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Tesla kind of shit the bed a little bit, so not super great. Their revenue growth came in at 3%. Auto revenue came in at just 1% from a year earlier, so growth, not great. They say vehicle volume growth in 2024 may be notably lower, so that is not great guidance either. Tesla kind of hitting the brakes on the growth story. 71 cents on earnings versus 74 expected. Revenues also missed by a little bit here, about 400 billion, so not great on both of those numbers. And the big thing is their deliveries are not expected to grow much this year, so weak guidance, weak deliveries. And the question is, will their other businesses start to pick up the slack? It's certainly possible that that may happen in the future, but it just hasn't happened yet. And they mentioned some of those other businesses here with AI as well as the supercharger network. Moving over to fear and greed, we are back into extreme greed with that Netflix earnings. Markets went notably higher here today. And strength, basically flat. Breadth continues to decline. Put call ratio, still in extreme greed. It did dip down quite a bit. We'll take a look at that on the charts today as well. And then we did see a slight spike up in the VIX, which is also interesting. I'm sure it hit our level. I expected it to touch that level today, and I bet that it did. And then looking at safe haven demand, still no fear here in the bond markets at all. Moving over to seasonality, trading day 16, kind of a peak here, looking for declines going forward here from the NASDAQ. Russell, on the other hand, we did get a bit of a dip here today, so that might have been a little bit early. Still expecting one more jump there on the Russell and then a decline into the end of the month. We'll see how that one plays out. But really at this point, most of the rallies have happened in terms of seasonality. Moving over to earnings. Already talked about it. Tesla missing on both the top and bottom lines. Not great. On the other hand, you do have IBM beating on both. Services Now also beating on both. AT&T did miss on earnings. I heard that they were going down a little bit after hours. And then General Dynamics missed on earnings also. And then looking at Thursday, you have Visa and Intel after hours, Comcast pre-market, Union Pacific pre-market, as well as NextEra Energy. Most of the heavy hitters for the week are done except for Visa and Intel. Moving over to the earnings calendar, Global Services PMI came in pretty hot at 945. You like to see it. Both of these came in above the 50 line, so you're seeing growth on the economic side. Let's look at tomorrow. Remember, this is the big one for the week. You got GDP, that's the big one. You also have core durable goods orders at 8:30, both of those at 8:30, and then you have new home sales month over month at 10 o'clock, and then Fed balance sheet as well as 7-year note auction. So lots of big data coming out tomorrow. Moving over to Max Payne, 45 continues to be a decent call wall. We're just above it here by about 50 cents. 490 is that next one. Top of the puts around 487.50. Put wall 480. So we're between there now, right on that call wall. We'll see how it finishes out for the week. Honestly, I would expect this to drift just a little bit higher, potentially towards that 487 level, just based on the strength that we've been seeing. Moving over to the S&Ps on the charts here. On the hourly chart, you can see we rallied super aggressively pre-market and then into the open. And then the last 4 candles of the day were pretty bearish. Came back and retested the high here from Monday. So pretty interesting. Still bullish on the day. For the day, we were up 0.11%. Momentum definitely bearish there. Almost tested the 55 EMA on the hourly chart. So watching that one, we're below the 50 line on RSI as well. So definitely going to be interesting going into the big data tomorrow, as well as Visa and Intel. Definitely could push the markets around. If GDP numbers come in a little bit weak, I think that could be a pretty bearish indicator for markets. Definitely something to watch for tomorrow. In terms of structure, obviously everything is still bullish on the longer term, well above all the EMAs, and they are all still in order, so you have to respect that. But shorter term, definitely showing some rejection, probably just from extension. Moving over to the NASDAQ, similar thesis. Actually held up a little bit better here. You can see we didn't quite test the highs here from Monday, so rallied up pre-market, dipped into the mid-session, ended up about 0.5% momentum on the longer time frames, bullish, super overbought on the daily chart. Let's go ahead and look at the weekly just for a moment. Yep, super overbought on the weekly chart as well. Doesn't mean we can't go higher, but just something to pay attention to. Definitely extended here. And then looking at the hourly, like I said, below the 9 and 21 EMAs, didn't really get very close to that 55, but watching it here as we see a little bit of bearish momentum in the shorter time frames. Moving over to the Russell and the Dow, very, very different thesis here. So we had a clear double top on the Russell, rallied up, hit that at same exact level, almost touched my 198.75 level, and then we fell all through the session, broke my level here at 195.15, almost down to that 200 SMA on the hourly chart, took out this midpoint, so clear double top. Question is, what happens next? Do we hold at this 200? Do you hold at the trend line here at 193.28? Momentum bearish, but we did see a step towards bullish. Let's look at it on the daily chart. Clear bearish candle. Fully engulfed the previous one. Momentum basically flat from yesterday. If we get a continuation lower tomorrow, you're probably going to see another swing on momentum. And then the question is, what happens next? Do we see a double bottom at this previous level? That's going to be closer to 187.87. Or do we end up holding 191.81 after we get through some of these levels? Momentum, like I said, still flat. RSI could hold here. Definitely one to watch tomorrow. Russell showing a little bit of weakness. And then similarly on the Dow, you have a double top. You could argue maybe a slightly lower high. We didn't get to the very top of those wicks. Momentum bearish. Let's look at it on the daily. Similar thesis. Fully engulfed the previous candle. Pulled back right at those lows from yesterday. 9 EMA sitting down at 376.68. Momentum flat. You would expect this to roll over. Look at that RSI as well. Let's go ahead and look at that real quick. You can see we broke above the SMA just for a moment and then broke back below it. That is not a great indicator of price action. Price target for me would be 376.35, at least in the short term. Moving over to Apple and Tesla. Apple had a bearish day, 0.35. The wick was a little bit higher, up to 196.44. And then we engulfed the previous candle. Bearish on the day. Momentum still bullish. RSI pulling back a little bit. Let's look at it on the hourly chart. Kind of mimics the major indices a little bit. Rallied up, but then we gave back all those gains and then some. Hit the 55 EMA, interesting level, broke below the trend here after hours. If 193.96 breaks, which is right where we are to the penny, then there's probably a lot of downside to come here on Apple. You can see the 144 sitting all the way down at 188.48. And then moving over here to Tesla, let's go full screen on that one. This has not been a great chart. It's been kind of this expanding wedge to the downside. Overthrew it a little bit, thought this structure might have broken, and then we fell right back into it. We were holding this level for a while. And we finished right in that same area until we had the earnings. Let's look at it on the hourly chart. You can see we absolutely cratered from that level right to the next one, 197.75. You're above it here just by a few pennies, but that was a big move after hours. That was about 5.5% on a very large company going back to the daily. So based on that, we are at this level here, which marks the lows here from October as well. Next level for me, 188.50. And then if those levels start to break down, let's go ahead and extend out these trend lines. If you get a test of the trend line, that would obviously be much, much lower. It's not impossible. Tesla was in this same area going back to April of 23. So Tesla not looking great, and that's probably going to pull down markets, especially the NASDAQ, and we're already starting to see that. Moving over to Microsoft and Meta, the big drivers for growth right now in markets. Microsoft topped $3 trillion just for a moment. I think it pulled back from that level ultimately, but it was up almost 1%. You can see it's up a little bit more after hours. It's just going straight up at this point. Absolutely massive. Can it hold these gains? Who knows? We were a little bit concerned on this rally, pulled back slightly and then rallied up again. So Microsoft absolutely looking massive, continues to look very strong. And then similarly here on Meta, this continues to be a rocket ship, up another 1.43% here today. Moving over to staples and discretionaries, both of these cratering on the day. Staples down 1.23% after being up more than 1% yesterday. Pretty interesting, definitely consolidating. Breaking down here, we're right at these lows. Got the 144 at 71.38. Could not get above 72.50. That's what I was watching for yesterday. Didn't do it, fell throughout the session, back into bearish momentum, back into bearish RSI here. And then looking at consumer discretionaries, we talked about this one yesterday. It's been holding in this consolidation for a while. Was testing VWAP, testing the 9 EMA, and then here with the Tesla earnings, we're down to the 55 EMA at 172.02. Next level 170.68. Let's Let's look at it on the 4-hour chart for a moment here. You can see massive gap down on the earnings right to that 200 SMA on the 4-hour chart. So critical area. If this breaks, there is a lot of downside potential in my opinion. Moving over to oil and gas and energy, these continue to look pretty bullish. 1.28 and 1.43% on the day. Momentum rolling towards bullish, RSI ticking towards bullish on the daily charts. Something to watch for, some opportunity here in my opinion going into tomorrow's session. Moving over to breadth, we are seeing breadth break down once again. So we talked about it. If this level broke here on the 200, could see an upswing back towards these highs, or at least the consolidation at 73. Now we have officially rejected here from the 200 SMA on the 20 chart. I would expect this to continue lower to at least a double bottom, maybe a slightly higher low here at the 3660, certainly possible, but realistically, when you see these kind of pullbacks, usually you see at least a double bottom, if not a bit of an overthrow, similar to these other previous moves. And then looking at 50-day average, similar to the 20-day, getting another breakdown from resistance, took out the trend line. Next level, 68.66, that's where we held the last time. Momentum bearish, RSI also bearish. Everything looks weak here on breadth. Moving over to the 2-year and the 10-year. On yields, 2-year basically flat, 0.27 to the upside, still in the same consolidation. 10-year breaking out, closing on its high, 1.16%, up around 4.18. We are moving consistently towards that normalized conditions, and I would expect that to continue until we get into normalized conditions. So that means the 10-year is probably going to head towards that 4.5 range. And the 2-year is probably going to hold in this area, if not dip a little bit lower. Moving over to the dollar, I really thought we were going to be able to hold this area and break out. Didn't quite do it. We were in this rising wedge, and you can see we actually closed below that level now. So this is a little bit more bearish, which is interesting considering that equities seem to be showing a little bit of weakness in the short term. But the dollar still in this consolidation honestly looks a little bit weaker. Held the 200 on the 2-hour chart. Let's look at it on the 1 hour. Got below all the EMAs for a moment, held that level. Again, still looks like consolidation with no clear direction. Moving over to bonds, JNK showed a little bit of weakness, but still in this wedge, not doing anything. Still in that same zone for the close. TLT, on the other hand, closed on its low and it's falling after hours. I continue to be bearish on TLT. I think this is going to sink lower. Question is, where does it stop? Pretty hard to tell. We are at these lows going back to August of 23. If this level breaks, then there is a lot more downside potential to come. This is an important level. Let's go ahead and make that full screen. You can see this is definitely an important level. We're right at the lows here from October of 22, which held for a very long time. We didn't break those lows until really here in September of 23. So those held for a long time. Then we broke all the way down to 83. So we are here again. If this holds, certainly would be nice. But at this point, I am expecting it to break down with what we're seeing on the 10-year. Moving over to the VIX here on the daily chart, you can see we did get very close to that level, came up just short of it, and then finished bullish on the day right back into this zone up around 13.15. Let's look at it on the shorter time frames, 1 hour. You can see so close to that level. Could argue that we did touch it. We did get into these lows from Thursday, January 11th, and then these same lows here from 28 December. So maybe we touched it. Maybe my level's just a little bit low. You could argue that maybe it needs to be moved up to about there. Then it would be right on that touch, very, very close. And then here we did get a pretty strong move higher through the level, ended up closing on the highs at 13.18. See how that plays out tomorrow, but if this gets another spike higher like we have been seeing, you should expect this to be a higher high, and that would get us up to that 1650 area, which would be quite bearish for markets. Moving over to my accounts, you can see I was basically flat on the day. And the reason for that is that I paid a little bit of money to roll out my Q's positions. IWM stays the same, 191s here for $9. You can see I'm getting a little bit of money back on those calls. If this breaks below 191, then I'll be out of that share position. Then I'll have to watch to get back into those shares potentially, or I can just collect the money on the credit side. And then looking at the Q's, you can see I did roll out here. I was not super patient on the day. We got all the way up into that 428, 429 area, which is well above my max profit on those positions. So I did roll out a little bit and I paid to do it. Ended up paying about $500 to do those 2 rolls to give myself quite a bit of room. You can see $29.50 here with a strike of 404.78, so almost 405. So with that roll here, that puts my max profit at 434.30. So that's a lot higher than where we are now. So it gave me quite a bit of room on that position, and it also rolled up my strike. So if we break below 404, then I can get out of these shares and then hold that call position to collect the rest of the credit there. And then looking at this next one, $25 for almost 410, which puts my max profit in that same range, right around 435. And that rolls up my stop loss on the share position. So almost 410 for that stop loss, and then I can collect the rest of the money on that. We'll see how it plays out. If the markets start to get weak, I'll continue to hold those call positions. And then similarly here on TQQQs, I rolled out one more week to 16 days at $55 for $4 credit. I think I paid a little bit to do that, which was also not great, but I already got $100 back on it. Profitable across the board. I'll probably look to take these puts off tomorrow. We'll see how that one plays out. And then XLE, maybe I can get out of this for $1 tomorrow. We'll see how that one goes. But right now, still holding slightly bullish, but being careful with these share positions. Let me know down in the comments section what you think of Tesla or the market moves that we saw today. Can tech continue to carry markets higher, or are we going to see weakness further down in the earnings cycle? Definitely let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.